Hi there, I'm Rob Bertman, founder of Money with Impact, and today we're going to talk about the major difference between a Roth IRA and a traditional IRA. Now, a few weeks back, I had a blog post called "Should I Contribute to My Retirement Plan?" where we talked about, maybe contributing to a retirement plan may not be the right thing for you, because most people don't think, should I contribute? They think, how much should I contribute? So if you want to hear more about that, I suggest you go back and check out that post called "Should I Contribute to My Retirement Plan?" But one of the great things that came out of that were the questions and feedback I got from you. And one of the major questions that I got was, Rob, what's the difference between a Roth IRA and a traditional IRA? And first of all, thanks for taking the time to ask this question and give me that feedback, because the reason I'm putting out these videos on a weekly basis is to provide you with the financial information that you want to learn about so that you can feel better and more empowered to take control of your money. That's what I'm trying to do. So thanks again for the feedback and questions. Please keep it coming. Now, another thing, just to be honest, sort of along those lines, is that I actually had this video and this blog post done, and I was about to post it, but then after reading it, I thought, it really wasn't up to the standards that you deserve, because again, I want to provide you with the tools, training, and resources so that you can take your financial matters into your own hands and on your own terms. And the way that I can best do that is taking things that may seem intimidating or concepts that you don't think you can learn about and breaking it down so it's simple and easy for you to understand. Because that's what I want to provide to you on a weekly basis. And so I went back to the drawing board. I cut out a lot of the stuff that really didn't resonate. I simplified it, and now I'm ready to give it to you again here. So anyway, thanks for taking the time. Thanks for the feedback and questions. So anyway, let's jump in here. So before we get into the differences between a Roth IRA and a traditional IRA, there are really three similarities that we should talk about first. Now, the first similarity has to do with how much money can you put into these accounts in any year. And whether you have a Roth IRA or a traditional IRA, that number for 2016 is $5,500. So now you could put in $500 this year, you could put in $1,000, $2,000, but no more than $5,500 for this year. Now, that's the first similarity. The second similarity has to do with how the money grows after it's in the account. So whether you have a traditional IRA or a Roth IRA, the money in that account grows tax-free while it's in there. So if you have a capital gain or dividend or income, which in any other account you might pay taxes on, in an IRA, you don't have to pay taxes on that. And to me, that's really the biggest benefit of having these accounts. So it grows tax-free. The third similarity is the age when you can take the money out without fees or penalties. And that age is 59 and a half. So as long as you're 59 and a half or older, whether you have a Roth or a traditional IRA, you can take money out without fees or penalties. So again, the three similarities are how much you can put in a given year. The second one is that it grows tax-free inside both accounts. And then the third is what age you can take it out, and that's 59 and a half. And that's why in the Should I Contribute to My Retirement Plan blog post, we talked about how, I don't know if I'm going to be retired in 20, 30, 40 years, but I do know that this money is only accessible to me without penalty and fees when I'm 60 or older. So that's why I call these accounts my 60 plus money. And again, to learn more about that, go check out Should I Contribute to My Retirement Plan. But anyway, those are the three similarities between the accounts. Now, the two major differences between a Roth and traditional IRA, the number one thing is the tax, how you're taxed when you put money into the account and when you take money out of the account. That's really the major difference. The second one has to do with, are you actually eligible to put money into these accounts? Now, I'm not going to go into the details there, because actually the IRS has a great website that has all that information of if you're actually eligible, because there are income limits that change and there are other factors that make you able to or not contribute to a traditional or a Roth IRA. And they're different for both of them. But anyway, learn more about that. If you just Google IRS, IRA eligibility, then that will get you to the page where they explain it. And these things change, so you want to make sure you're on top of that information. So anyway, back to taxes, because that's the main one I want to cover today. Again, the difference has to do with how you're taxed when you put money in and when you take it out. So let's start with a traditional IRA. Now, this would work just like a traditional 401k or 403b plan that you may have through work. But essentially, let's say I decide to put $5,000 into a traditional IRA this year. Now, when I do my taxes, I can take a tax deduction. I get a tax benefit for putting that money in the year that I put it in. Again, once it's in the account, it grows tax-free. And the other difference is that when I take money out when I'm 60 years old or older, I pay taxes on that money with a traditional IRA. And with a Roth IRA, it's flipped. So when I put money if I were to put $5,000 into a Roth IRA this year, I don't get any tax deduction. There's no tax benefit to me this year. Grows tax-free, just like a traditional IRA. But then another difference is when I take money out of a Roth IRA, I do not pay taxes on that money. So again, traditional IRA, you put money in, there's a tax benefit there. You pull money out, you have to pay taxes on what you take out. Where with a Roth IRA, there's no tax benefit to putting money in, but you also don't pay taxes on the way out. So that's really the main difference. And you might say, well, Rob, how do I know which one to choose? Well, personally, I prefer a Roth IRA because with a Roth IRA, I've already paid taxes on that money. I never have to pay taxes on that again as long as it's in the account and when I take the money out. So I'll give you an example of how that might work. So let's say I'm 60 years old and I decide I want to take $10,000 out of my IRA. So if I have a traditional IRA and I take $10,000 out of that account, let's say that I'm in the 25% tax bracket. Well, when I pull that $10,000 out, I have to pay taxes, $2,500 of taxes on that money that I take out because 25% of $10,000 is $2,500. So in other words, I take out $10,000 from a traditional IRA, I get to keep $7,500, but I pay $2,500 in taxes on that. But with a Roth IRA, when I pull money out of a Roth IRA, let's say I take $10,000 out, I don't pay taxes on that money. So I get that full $10,000 without having to pay taxes. Now, some people say that, well, it depends on if your tax rate is going to be higher or lower when you put money in and when you take it out, which should determine which one you want whether you want a traditional IRA or a Roth IRA. And I sort of disagree with that because who knows what tax rates are going to be 20, 30, 40 years from now. I certainly don't. And so it's just not worth it to me to even think about that. I'm thinking, look, the income limits on contributing to a Roth IRA are actually lower than a traditional IRA. So I'll put money into a Roth IRA because my income will hopefully go up. But while my taxes aren't a big deal to me when I'm not making as much money, I'll put money into a Roth, it grows tax-free, and I never have to pay taxes on that money again. Where let's say with a traditional IRA, maybe I'm not making that much money now, I put money in, I get the tax benefit then, but when I'm older, I'm making all sorts of money, or I've built up a lot of money over time, I take money out, I'm going to pay taxes on that. Now, things can change over time. We don't know the difference, but I just prefer a Roth IRA. And that's just the way that I feel. I'd rather pay the taxes now, and that gets rid of the uncertainty of what tax rates are going to be in 20, 30, 40 years. So anyway, I hope you liked this video. I hope it simplified it for you. The main difference is really about how it's taxed. I told you I prefer a Roth, but you have to make a decision that's right for you. But if you like these videos, if you've been watching these for a while and you've been picking them up on Facebook or Instagram or Twitter posts or LinkedIn, then if you want to get these delivered right to your inbox so you don't have to search for them and that you get them first thing on Tuesday, then sign up on that gray bar below. It says put in your first name and your email address. That way, as soon as this is done, I'll send it right out to you on Tuesdays. You don't have to go searching for it. And that way you can keep getting this information. And please connect with me. Please keep the questions and feedback coming because if there are topics that you want to learn about, I want to provide you with that information. Again, I want to get you the tools, training, and resources you need so that you can feel confident with your money and do it on your own terms. So keep them coming. I greatly appreciate you taking the time. Look forward to the next blog next week. I'm not sure what it's going to be yet, depending on what you come up with or maybe what I come up with. But I look forward to talking to you soon. Please sign up below, first name and email address to get these coming to you on a weekly basis. And we'll talk to you soon. Thanks.